मैं मां लक्ष्मी से प्रार्थना करता हूं कि देश के हर गरीब एवं मध्यम वर्ग समुदाय पर मां लक्ष्मी की विशेष कृपा रहे। ये बजट एक नया विश्वास पैदा करेगा, नई ऊर्जा देगा।
Hello and welcome to our special Budget Day edition of Power Breakfast. I'm Nigel and with me is Mangla. Manglam, big day, all set for it.
Big day, all set for it. So let's get straight into it and tell you the top story of the day. It is D-Day, and in a few hours from now, Finance Minister Nirmala Sitharaman will become the first Finance Minister in India's history to present 8 consecutive union budgets. This amid current backdrop of downbeat equity market sentiment, weakening consumption impulse and sluggish government capex.
The budget will likely aim to boost the economy and address the growth challenges, perhaps by also focusing on high multiplier sectors. Experts believe the focus will be on consumption and increasing capital expenditure while maintaining fiscal discipline.
Tax. That's the big word that everyone is keeping a close watch on. And it looks like the budget might just bring in good tidings for the middle class. Sources have told CNBC TV18 that the government is likely to announce measures to provide some relief to the middle class to increase their spending power.
The Economic Survey expects modest growth of 6.3 to 6.8% in FY26, not much different from the estimated 6.5% in FY25. It sees some positive domestic cues, but also global risk and calls for deregulation and reforms at the grassroots level to lift competitiveness and growth.
Don't lose sight of the global markets though. Wall Street indices end lower after White House says tariffs on Mexico, Canada and China will begin from today. Yields end at 1-week highs. You're set for the day today. We've told you what the top stories would be. The most important thing will be the budget itself. So let's talk about that, because in a few hours from now, Finance Minister Nirmala Sitharaman will deliver her 8th union budget in the parliament in what will be the first full budget of the new NDA government. The Finance Minister and her team at the North Block have prepared a budget of over 50 trillion rupees for FY26. This budget will have to address several challenges that include decelerating economic growth, falling value of the rupee and moderation in consumption demand. What remains important is to see if the common man's ask on any rejig in income tax rates do come through, and more importantly, if the budget delivers measures to pump prime and bolster growth without sacrificing fiscal prudence. Prime Minister Narendra Modi has promised a budget that will set the direction for a Viksit Bharat by 2047. So let's first listen to the Prime Minister's comments.
हम सर्वांगीण विकास के संकल्प को लेकर के मिशन मोड में आगे बढ़ते जा रहे हैं। इनोवेशन, इंक्लूजन और इन्वेस्टमेंट, ये लगातार हमारे आर्थिक गतिविधि के रोड मैप का आधार रहा है। रिफॉर्म, परफॉर्म एंड ट्रांसफॉर्म। जब विकास की तेज गति को प्राप्त करना होता है तो सबसे ज्यादा बल रिफॉर्म पर रहता है। राज्य और केंद्र सरकार ने मिलकर के परफॉर्म करना होता है और जन भागीदारी से हम ट्रांसफॉर्मेशन देख सकते हैं।
Well, that was our Prime Minister. But let's go across now to Timsy, who's standing by to tell us what could be the budgetary agenda. Timsy.
Well, some of the key expectations from the union budget is that the government will not deviate from the path it has laid for the fiscal prudence, and the expenditures are also likely to remain in check. Most of the expectations are that the fiscal deficit number for FY26 is likely to range between 4.6% to 4.4% of the GDP. When it comes to divestment receipts, expectations are that there might not be a significant jump in the divestment receipts for FY26, but yes, when it comes to subsidies, the expectations are that it may rise substantially in FY25, surpassing the budget estimates by about 18% or so, but when they're expected for the next fiscal, they are likely to remain steady. When it comes to taxation side, some of the expectations include that the government could give some sort of a sweeteners when it comes to the new regime. But yes, when it comes to the old personal tax regime, there might not be any change. On the other hand, when it comes to the taxes levied on the corporates, there could be a reintroduction of the concessional corporate tax rate, which expired in March 2024. So that's also another key expectation. And yes, when it comes to further simplification of rules, procedures, simplification in terms of the Income Tax Act, that is something where a statement will be laid out. When it comes to simplification towards the custom duty rate structure, that too is expected in the budget. Let's see what finally happens when Finance Minister Nirmala Sitharaman unveils her 8th record budget.
Those are the expectations from the budget, but we got a preview into how the economy is on account of the economic survey that came by. The economic survey expects modest growth of 6.3 to 6.8% for FY26, which is not very far from its FY25 estimate. Parikshit now joins in to give us highlights from the economic survey that was tabled yesterday.
The economic survey notes that the real GDP growth in FY26 is expected to be between 6.3 and 6.8%. The CA has warned about the critical risk regarding dominance of financial markets in shaping policy and macroeconomic outcomes, which has led to unprecedented levels of public and private sector debt in some advanced economies. The Economic Survey 2025 has given a clarion call for deregulation and getting out of the way. The CA has gone on to say that the future of reforms in economic policy must now be on systematic deregulation, and government must get out of the way and not micromanage the corporate sector with regulations. On AI, the survey says that a collaborative effort between the government, private sector and academia is essential to minimize the adverse societal effects of AI-driven transformation and deliver inclusive growth. The CA, in his briefing, highlighted the huge disparity between profits and distribution of incomes in the private sector. While corporate profitability soared to a 15-year peak in FY24, the wages have lagged. A striking disparity has emerged in corporate India. Profits climbed 22.3% in FY24, but employment grew by a mere 1.5%. Despite Indian companies achieving a stable EBITDA margin of 22% over the last 4 years, wage growth has moderated. This uneven growth trajectory raises critical concerns. Wage stagnation is pronounced, particularly at entry-level IT positions. On trade, the survey says that to remain competitive and enhance its participation in global supply chains, India must continue reducing trading costs and improve facilitation in order to boost export competitiveness.
Thanks a lot, Parikshit. Well, the Chief Economic Advisor made a pitch for deregulation. They've asked the government to get out of the way and allow businesses to focus on their core mission. They say that the governments must stop micromanaging economic activity.
Both don't have to be mutually exclusive, and deregulation or basically removing the fear of growth in our business enterprises has been an enduring issue over the years, and it's still, and while much has been done in the last 10 years or so, both in the union government level and in state governments, much more remains to be done, and that could itself also address the demand problem, because it can sort of stimulate a virtuous circle of economic activity, leading to greater hiring, compensation, and income growth, and therefore demand growth as well. yes, there could be a capacity constraint with respect to spending on the part of the public sector. When I say public sector deliberately, I don't use the word union governments, use the words union government. I'm referring to the entire public sector, which includes state governments also. So therefore, there is a need for the private sector to look at the need for ramping up investment and its implications for demand, because ultimately, in an economy, it is the private sector that is mutually endogenous. Private sector consists of both households and enterprises. Public sector, fiscal policy, and external demand, foreign trade, both are exogenous to the system. So the private sector can actually do a lot to stimulate demand and thereby justify its own investments.
Well, and just to reiterate what was earlier mentioned, the economic survey also raised alarm over disproportionate rise in corporate profits when wage growth is stagnant. Top corporate captains responded to the chief economic advisor's clarion call for aligning wage growth with profits, also reiterated the need for capex hike.
When wages are determined by inflation, it is determined by wage surveys in the market. They are not indexed to profitability. And because when profitability goes down, the reverse doesn't happen also. That's not the way it is done. And what we have to also look at the fact is when we are looking at wage growth, we are looking at an aggregate number. The fact of the matter is industry has become efficient and needs to do so to be competitive. The fact of the matter is there is certification of industry. A lot of components of manufacturing are now become to be done by specialized services agency. And that's what's happened across the world.
First, we would say stay the course on capex. That's been a plus in the budgets over the last few years, which is a focus on the multiplier effect that capex brings in and the positivity from an economy standpoint on that front. The second is there is clearly a need for some demand stimulation because we see weakness in the middle and the lower segments, and that's something that needs to be addressed in a pinpoint manner for them.
All right, time to slip into a short break. We'll get you market setup on the other side.
Welcome back. You're watching us here on Budget Breakfast with Mangalam Malu and Nigel D'Souza. This is your budget headquarters on CNBC TV 18. We've told you what the expectations from the budget are, but let's tell you how the street is faring as well. So let's take a look at the overnight cues first. On Wall Street, stocks gave up early gains after White House announced tariffs will start from Saturday. That is today. The S&P 500 shed 0.5%, while Dow Jones as well closed about 300 points lower. The tech-heavy Nasdaq composite slipped 0.3%. The White House announced that Trump administration will be leveling a 25% tariff on Canada and Mexico, alongside a 10% duty on China as well. On the macro front, inflation closed out 2024 on a strong note as personal consumption expenditure in the US came in well above the central bank's target. The PCE price index increased 2.6% year over year in December, and we had the core PCE excluding food and energy, which was close to around 2.8%, while both were in line with expectations, but well ahead of the Fed's 2% target itself. That's about Wall Street. The important part is how D Street is. And Nigel, when you're going into the budget, the mood has been fairly somber. Yeah. If you look at, all the way from the top, we have the Nifty, which is down almost 10.5%. The Nifty Bank, which is down almost 9% from the top. We have the mid-cap and the small-cap indices down anywhere between 11 to 14% as well. We keep an eye out on all of this. Why is it that there is so much weakness? The biggest reason is the FII selling. If you look at it, in the month of January itself, the FIIs have sold almost $10 billion. And in the prior quarter itself, they've sold about $20 billion out there as well. So $30 billion outflow. The DIs have done well to match the FIIs selling dollar to dollar. But cash market selling from FIIs has definitely hurt us. And more so, it's hurt the rupee as well. So while the Nifty is down about 11% from the highs on a point-to-point basis. If you adjust it for the currency weakness that we've seen from the highs, the Nifty is actually down 14%. A lot of cash market selling. Weakness is there in the cash market itself. Is there this weakness in the F&O space as well?
Well, that's right. Mangalam, just to build on to that point, in yesterday's trading section, actually the FI net sell number was a little bit lower. So the hope is that, in fact, it's reaching some level of exhaustion. At least that's the hope. But as you said, let's look at the F&O market. Well, yesterday, no prizes for guessing. They added more shorts than longs yet again. And in percentage terms, now the net short positions are at around 88% or thereabouts. And this is the highest ever we have seen in terms of percentage terms. Remember, there was a contract regrouping out there and the resizing out there. So we're looking at it in percentage terms. Highest ever short positions you've seen in percentage terms since October 2023. And getting to a budget, I went through last few budgets, getting to the budget, 5-6 budgets. We haven't seen the FI's net short close to around 88% or thereabouts. What about the index futures? Well, if you look at the clients as well as the FIs are aggressively net short, but the clients, they are aggressively net long. So both of them on the opposite ends of the spectrum. And the FIs actually have been having the upper hand. But if the finance minister has something good to offer, then maybe those FIs, they get stumped on the wrong side. What about the options data? The FIs have bought more calls than puts, as that data point is telling you. But it seems it's hedged because they've also written more calls than puts out there. So the short point is, if there is a positive surprise, these FIs, they could be caught napping. They could be caught on the wrong side. So we'll watch for a short covering bounce, if at all, there is some good news. Because in the last few sessions, we at least haven't seen any big short covering bounce, particularly from the FI positioning.
We take that point, and we can't blame the FIIs for that as well, because the mood of the market right now is fairly somber. Not only has the Nifty corrected about 10-11%, but there have been reasons for that as well. If you look at the fundamental reasons for the same, the second quarter and the third quarter earnings so far that we've gotten, they've been fairly forgettable. And it's not just corporate earnings that we're looking at. The government capex has also been delayed for various reasons, elections, etc. So pumping that once again, or deploying that once again, would be extremely crucial. We've heard from consumption companies and a lot of others also talk about urban consumption slowdown, even as rural is gradually recovering. And all these are domestic problems. Look at the geopolitical uncertainty that we had. We had the US election around Trump, and then suddenly we had these AI battles between the US and China. So the mood is fairly somber. The big question, however, is what is it that the bulls want? 3 things that the bulls will be looking at.
Well, that's right, Mangalam. The 3 things that the bulls will want. And for me, I'll be looking at the capex expenditure number very, very crucially. Because last year, the markets, they cheered that number. Yes. Unfortunately, the spending hasn't been as much as what was laid out. So around 11 lakh crores, what was laid out, we're going to be falling short of that target. But how much do we fall short of that? And what is the projection for next year? The street would want, a number close to around 11.5 to around 12 lakh crores approximately. That will make the bulls very, very happy. So that's point number 1. And as we know, capex spend is a multiplier. Point number 1. Point number 2, don't tinker with LTCJ or STCJ. If you want to cut it, that'll be great. But don't tinker. No hikes out there. So that's the second point that the markets will look forward to. And they'll say budget will go down, okay. All eyes on the next, next week itself, because then you have the RBI. And in the last few days, they have been taking measures via the OMO and other routes to put some liquidity into the system. So that's the next trigger. 3 top points: capex spend, don't tinker with the LTCJ, STCJ, and also then the RBI comes in for the final flourish.
And once they, pump prime some of the consumption as well, with the RBI cutting rates, all of that will then have a multiplier effect on the economy itself. And the biggest beneficiary of that, or the biggest way to play the GDP growth, would be the financial space. If the RBI does have to go ahead and, cut those rates on Feb 7th, it's the Nifty Bank that we'll be looking at. The last few trading sessions, we've seen signs of life coming back to Nifty Bank. So it's above the 20-day moving average. From where it is right now, it has about 1,000-point headroom from here as well. So are we looking at the Nifty Bank around 200-day moving average, 50-day moving average between 50,800 and 50,900? We cross past that, then maybe, we go to much higher levels as well. So that 1,000-point gap headroom is available for the Nifty Bank. What about the main index, the Nifty?
Well, the Nifty, if we pull up a chart, Mangalam, the 50 and the, the 200 EMA should come up for our viewers. And if you look at that chart, it's telling you that around the 23,800, 23,900, that's where there should be some kind of resistance on the upside. On the downside, you already have your reference point, which would be the 22,800 mark, which incidentally is the recent low. So that's the broad band we're looking at. But if the Nifty needs to swing around, there's going to be a big boy, ITC, that's gone into this, into budget day just yesterday. You saw a good pop out there. And that's always the stock in focus. Mangalam, please tell us, what do we expect of that?
Well, the ITC stock, if you have to, summarize the budget into just one stock, it has to be ITC. And why is that? Because if you look at the ITC range over the last many budgets, right from 2020, even if you go back all the way up to 2018, on a daily basis, the swings that we see on ITC are more than 5%, 10%, at times 11% as well. So that is the one stock to watch out for and has a fair weight on the index as well. Any tax increase leading to sub 10% of overall price impact would be a positive for ITC, because that will not harm volumes as much, and that will not harm, the illegal, the legal cigarette industry, because any more than that, the illegal cigarette industry continues to thrive. Add to that, you have any measures coming in on the dividend front, maybe ITC has a play out there. You have any measures coming in from the consumption front, ITC has a play out there. You have any measures coming in from tourism or urban consumption, ITC has a, foot in the door out there. You look at rural, ITC has a foot in the door out there. So if you had to, make a microcosm of the budget, it has to be ITC. That's the one stock I'll be most definitely looking at.
Well, and rest assured, Mangalam will be on top of that. We'll be telling you the impact of any kind of tweaks with regard to the duties out there. But, Mangalam and me have gone on for a goodish bit. Let's spice things up. The audience wants to hear what's on Hormuz's radar today. Hormuz, tell us, there are going to be a few stocks reacting to various news pieces. Take it away.
Morning, guys. And yes, it's a big day. And of course, you keep an eye out on the usual suspects, right? The defense names, railway names, capital goods names. But of course, can't not ignore earnings. And there'll be plenty of earnings reactions in today's session. We'll start off with IndusInd Bank, where the numbers of the profitability was down 39% from last year. The NII operating profit was also lower. Asset quality saw a marginal deterioration from the previous quarter. So we'll keep an eye out on that. ONGC reported numbers as well. You can see that on most parameters, the numbers were higher than expectations. But on a quarter-on-quarter basis, they were fairly okay. And Bandhan Bank, the numbers, of course, you keep an eye out for. The two numbers that you should watch out for is the slippage number, which was higher on a quarter-on-quarter basis, and the write-offs figure that has seen a significant jump compared to the previous quarter as well. Now, Vishal Mega Mart, first number released after listing. It's a recent listing, of course. The revenue growth of 19% was lower than the historical band, which is 24 to 26. And the also management said that there is subdued demand conditions within the consumer industry, and you see that in results of DMart as well. And the same store sales growth also stood at around 10.5% for the quarter. And there are some top level exits that have come in aside of the earnings. Watch out for Hero MotoCorp. Of course, they come out with auto sales numbers today, but CEO Niranjan Gupta has decided to step down. Vikram Kasbekar will also be the acting CEO from the 1st of May. And also watch out for Z Entertainment, because its acting CHRO Dheeraj Jaggi has also quit, citing personal reasons. And lastly, keep an eye out for Tata Power, where the company has signed an MOU with Rajasthan Discoms, various Discoms, to accelerate the rooftop solar adoption. So there are plenty of stocks to watch out for. It's a big day that's in the offing. Back to you guys.
All right, Hormuz, thanks a lot for that. Just before we, prep up for the big day, once again, tell you what's happening in the budget, get on top of that as well. Nigel, I was quite intrigued by the color of your tie and your pocket square. It's pink. What does it signify?
Well, Prime Minister said, right, the budget is going to have something to offer for ladies, for women. So that's one reason. The other factor is maybe the economy gets back into the pink of health. So that's the reason for pink. But what about you? What's with the color?
The green. Market wants to be in the green. That's what the budget wants. And you want, sustainability. At the same time, you also want the dollars to come back. What is the dollar called? The greenback. That explains the green and the pink. With that, we wrap up on this edition of Budget Breakfast. You stay tuned to CNBC TV 18 for the continued comprehensive coverage of Budget 2025. It's CNBC TV 18, your budget headquarters.